Welcome to the deep dive.
Good to be gigging in again.
Yeah, definitely. So we're tackling a really interesting stack of sources today, all provided by you, the listener.
That's right.
And this batch, it really zeroes in on the cryptocurrency market. Gives us a snapshot from one specific day, June 13th, 2025.
Our mission really is to dig into these articles you've sent, pull out the most important bits, and see what they, collectively tell us about crypto on that particular day.
Right. Not just what happened, but maybe why, according to these sources.
Exactly. What forces were at play.
And looking through this material, there's a clear tension, isn't there?
Oh, absolutely.
Your sources highlight these market downturns tied to external events, but then also some pretty significant positive developments for certain assets and some interesting institutional moves, too.
It's a fascinating contrast, really sets the stage.
Okay, so let's start unpacking this. What do your sources say about the overall market picture on June 13th?
Well, the general picture wasn't pretty, according to the data presented. Widespread losses.
Yeah, one source notes that as of 3:00 p.m. Korea Standard Time, Bitcoin was down about 3.32%, trading around $104,214.
Okay. And another source we looked at points out Ethereum, that saw an even bigger dip, down, 9.18%.
Wow, yeah, 9.18%. That's quite a drop. Those numbers definitely suggest a pretty strong market correction hitting the big guys.
Right. Hitting many major assets at the same time.
But here's where your sources start getting really interesting right away. One mentions that despite this general, sea of red, another asset, AB, was actually up 6.43% on that same day.
Okay, so a definite outlier then.
Yeah. Which immediately makes you ask, well, what was driving the general market losses that these articles are reporting?
Good question. What do they say?
Well, one source makes a pretty direct link. It states that military action by Israel triggered a, quote, massive cryptocurrency market crash.
Okay, so blaming geopolitical tensions directly.
Yeah. It attributes this downturn to those tensions causing massive liquidations and market volatility. That's the quote.
Right. And this connection, between global events and crypto market reaction, it's something your sources seem to really emphasize here.
They do. And the numbers cited for those liquidations are, well, they're stark.
Yeah.
One article specifically quantifies it, reporting over $1 billion with a B in crypto liquidations just in 24 hours.
$1 billion. Wow.
Yeah, that's just an incredible amount of forced selling, isn't it?
It really is. And if you dig a little deeper into that source, it clarifies that $943 million of that billion, it came from long positions.
Okay, so long's getting wiped out.
Exactly. So for anyone maybe not deep in the trading jargon, liquidations basically means traders using borrowed money leverage, betting on prices going up, they got forced to sell automatically as prices fell to cover those loans.
Right. That's the long position bet.
Precisely. And when lots of these happen fast, it can sort of cascade, pushing prices down even faster.
Okay. So your sources show a market that's highly sensitive to these immediate external shocks and the sort of the mechanical unwinding of leverage that follows.
Yeah, paints one clear picture of volatility on June 13th. Definitely.
But then, like you highlighted earlier, these same sources present completely different stories for specific assets, kind of counter to that general dip.
Exactly. That's the contrast. One article you shared, the one titled Top Trending Crypto 2025, it points to significant individual performances, things that seem almost decoupled from the broader market fear described elsewhere.
Like BNB. The source reported a 275% surge for BNB.
275%.
I know, that's just a monumental move. Certainly doesn't reflect Bitcoin and Ethereum being down notably on the same day.
Not at all. And Polkadot was also noted in that source as rising.
Right.
And that same piece, it specifically highlights BlackRock, mentions its X1 miner app as a driver for, quote, mass adoption.
The X1 app. And it reported BlackRock's presence in, what was it, over 150 countries?
Yeah, 150 plus countries ahead of a planned go live. These are very specific, project-centric, positive developments being cited as drivers, things happening within those projects.
It's almost like these specific projects have their own momentum, doesn't it? Like they're being pushed by internal developments and adoption news, not just the general market wind.
Well put. And that theme, internal momentum versus external shock, it seems to extend beyond just individual assets. It goes into the corporate and institutional world too, according to your sources.
Right, let's pivot to that. Look at the SL Surge source. It mentions a DeFi development corp equity line boosts Treasury.
Okay, so DeFi related to Solana.
Yeah. And while we don't know the specifics of this corporation, the mention of an equity line that sounds like traditional finance backing.
Yeah, it does, like a credit line or financial support boosting a treasury for DeFi development. It strongly implies corporate financial engagement in that specific part of the crypto ecosystem.
Suggests traditional financial structures are maybe finding ways to support specific areas of crypto innovation.
Seems like it. And it's not just limited to DeFi or newer projects either. Your sources also report some significant moves involving Bitcoin itself.
Ah, yes. There's that source about a Japan-based company. It says they've officially joined the ranks of organizations buying Bitcoin.
Okay, another corporate buyer.
Yeah, but the interesting detail here in that source is that they apparently announced their intentions way back in February.
Oh, so not a snap decision then.
Exactly. It implies this wasn't them reacting to recent prices, but actually following through on a stated, deliberate corporate strategy planned months ago.
That's a key distinction. Deliberate action versus reaction.
And then, if we connect this to maybe the biggest piece of institutional news your sources contain.
You mean BlackRock?
Yeah, BlackRock. Described as the world's largest asset manager. That source reports their vision.
Yeah.
It's pretty bold. Targeting $50 billion in crypto AUM, assets under management.
By 2030, right?
By 2030. $50 billion.
That is a massive target, especially coming from the world's largest asset manager. It really speaks to a very strong long-term belief in this asset class.
And a concrete plan, presumably, to allocate significant capital to it over time.
You'd have to assume so. It's not just wishful thinking at that level.
Okay, so let's try and put these pieces together. From your June 13th, 2025 snapshot, you've got this immediate, sharp dip, huge liquidations driven by external events.
Right, the geopolitical shockwave.
But alongside that, specific assets surging, like BNB. And these strong signals of corporate adoption, like the Japanese firm buying Bitcoin, and institutional long-term vision, like BlackRock's huge AUM target.
So what does it all mean together?
Well, what's fascinating here, looking at how your sources lay it out, is that the crypto market isn't reacting as like one single thing.
Good point.
The immediate market price, influenced by leverage and sentiment, it can be violently shaken by global events. That leads to that billion-dollar wave of liquidations we talked about.
The short-term volatility is clearly there. Huge swings.
But at the same time, completely separate engines seem to be driving progress. You have individual project development leading to massive gains for some, like that BNB example.
Yeah, the internal factor.
And you have major financial institutions making these deliberate long-term moves, buying in, building infrastructure, seemingly kind of undeterred by the daily noise and volatility.
Exactly. It highlights that there are different layers, maybe different timelines operating simultaneously here.
Right.
The short-term price is definitely vulnerable to those external shocks. But the long-term story, the adoption story, at least based on the actions reported by the corporations and institutions in your sources, that seems to be progressing on its own path.
So your sources give us this kind of dual perspective operating in parallel on that day.
Yeah, I think that's a good way to put it.
It really paints a much more nuanced picture than just, looking at the price chart for June 13th.
Definitely.
It shows the forces pulling the market down right next to the forces steadily building it up. At the same time.
Precisely. And understanding that interplay, that tension, that's probably crucial when trying to make sense of this whole space.
Okay, so reflecting on this deep dive, using your sources from June 13th, 2025, we saw the sharp market dip, the huge liquidations triggered by external events.
Starkly contrasted with specific asset successes driven by their own internal momentum.
And these concrete moves by major corporations and institutions, signaling deliberate long-term adoption and a serious future vision.
Yeah, these sources together, they provide a really compelling snapshot, don't they? A market that's highly reactive to immediate global volatility.
Yet simultaneously seeing this significant, maybe quieter progress, driven by project innovation and these big long-term strategic plays from major financial players.
That's a picture they paint.
So here's something to think about, based purely on this kind of information we've discussed today from your sources.
You have the immediate volatile impacts of global events causing sharp drops, liquidations, set against the steady long-term ambitions and actions of these major financial players who are deepening their involvement, based purely on the snapshot from June 13th. Which force do you think potentially holds more sway over the long-term trajectory? This is a really powerful question highlighted by the contrasting stories you brought us. Something to mull over.